A late rally lifts the Wall Street. The sensex and the nifty reverse losses in the last hour to end in the green. Bank stocks lead the recovery.
M&M beats estimates in the third quarter, even as unseasonal rains take a toll on tractor sales. Shares of Nalco rally after third quarter profit rises nearly twofold.
Shares of oil marketing companies continue to rally. JP Morgan predicts more upside and says that the consensus EPS estimates remain too low. Hello and welcome to Markets Forward, the show where we aim to get you all set for the next trading session and also give you a quick preview about what went on in today's trading session. I'm Nigel D'Souza, and joining me, my colleague Surabhi Upadhyay. Hey, Surabhi.
Hi, Nigel. Not bad. Good fight back from the bulls, right, today? And given that we woke up to such negative cues, this 550-point decline in the Dow, big fear around those rising yields again, given all of that, perhaps this was not a bad show at all. So very quickly, we'll just talk about the market action and then, of course, we get started. So what happened today? Basically, a 300-point recovery on the Nifty, actually slightly more than 300 points on the Nifty, and a close practically at the highs of the day. So that's point number one that points out to strength. What led it? One thing is for sure, PSUs are still going strong. That party is still up and about, both on PSU banking, railway stocks, and a clutch of others, and we'll talk about that as we go forward. But on banks, it was SBI leading the charge. The Bank Nifty did help the Nifty quite a bit, but it was SBI which was up, and HDFC Bank was still struggling. So this dichotomy between the two giants, that continued. That was the second facet in today's trading action. And the third point, Nigel, that I noticed was the big recovery in mid-caps. I mean, today was a day when we had a good advance decline ratio. And even beyond PSUs, there were a lot of other mid-caps that were doing fairly well.
Well, that's right. You know, it seems that the data point suggested that normally on Valentine's Day, the markets end lower. But the bulls said, no, we're going to buy into this dip that we're getting. And that's why, they proved it wrong. The Nifty ended high with a gain of close to around 100 points by the time we wound up. But the real space that made a lot of money today was the Nifty PSE as well as the Nifty PSU banking space. Both of them big outperformers, up anything between 2 to around 3% in today's trading session. And also, the Nifty Bank, that chart actually tells you the picture perfectly. Let's pull up the Nifty Bank. It took support at around the 200 DMA and it charged forward towards the 20 DMA. It came off a little bit towards the end because it had an expiry related factor. But the Nifty Bank, that was the star mover, up 1,000 points from the day's low. What didn't do well? There were a little bit of jitters in the global markets. When that happens, the yields move up. That's the 10-year US yields move up. That's why you saw that IT as well as pharma, they were relative underperformers today. But the story for me, Surabhi, is really the outperformance of the broader markets. Yeah. Yesterday as well, we saw that by the time we wound up, the number of stocks advancing, well, they pulled back quickly in comparison to what it was, say, at around 9:30 a.m. And today, cross lines, you'll see the breadth of the market was very good. Started off absolutely, in favor of the declines and then recovered. You had more stocks advancing than the number of stocks declining. So it explains why your portfolios will be looking much better today.
I guess that's the kind of market we're in. Corrections are very short and usually very shallow. At least that's what we've been witnessing in the recent past. Well, with that, let's quickly move on and tell you what the lineup is looking like on the show today. We'll, of course, start off with all the top movers of the day. And we'll have Mangalam joining in to talk us through some of the key highlights on the way up and the way down. The stock of the day was Mahindra & Mahindra. Numbers have come through. So Sonia will tell us how the numbers actually looked and sort of what the takeaway is after hearing the management as well. And then we have DStreet Chatter coming up with Nimesh. Today he's looking at Aurobindo Pharma. And he'll tell you why that stock was in focus and news and it was down largely throughout the session. And of course, all the events to watch out for tomorrow coming up as well in a bit. But let's kick it off first with the movers and shakers of the day. Mangalam, over to you.
Well, the movers and the shakers in today's trading session, we had all the oil and, energy companies, so to say. They did extremely well in today's trading session. So be it something like an ONGC or even the downstream companies like BPCL, the large trade that took place there, HPCL, IOC, Oil India doing well as well. And even, putting gains anywhere between 4 to 7%. But on the downside, we had IT and pharma. Let's start with the pharmaceutical pack. We had Glenmark, Aurobindo Pharma, Cipla, Dr. Reddy's, Sun Pharma, all of them under pressure. Aurobindo, of course, was for its own reasons. And IT as well. Despite the recovery that we saw in late trade, most of the big heavyweight IT stocks actually ended lower. So Infosys was down about 1%. Yes, it did see a bit of a recovery, but even the broader markets, stocks like Coforge, Mphasis, L&T Tech Services ended lower. But those were the few losers that we had in today's trading session. The PSUs, they resumed their up move. Coal India, BHEL, NBCC, Hudco, RITES, all of them ending anywhere between 5 to 7% higher, some even 10%. Metal stocks did extremely well. Nalco was, the top gainer there with a gain of almost 10%. Vedanta did well. News in the second half of trade. We had Tata Steel, NMDC, and Hindustan Copper too. Z was one of the stocks which actually was, the surprise mover of today's trading session. The results were weak. The stock opened lower along with the market, but thereafter the market disregarded the fundamentals and saw a big near 11% recovery from the lows for the stock to end about 6% higher. So maybe something is, underway in Z. So that's the other one. And Nuvama is also the one that gained in double digits on the back of strong results. Some other gainers with good volumes behind them, we had the likes of Jubilant Industries, Jyoti Labs, IRB Infra, Dilip Bincon, and Vodafone Idea.
Okay, all right, Mangalam, thanks a lot for that. Well, let's welcome our guests. We have Shrikant, Chouhan, who will help us out with the technicals, and Mayuresh, Joshi to help us out with the fundamentals. Hi, gentlemen. Thanks so much for joining in. Well, Shrikant, you go first. What did you make of today's recovery? Numerous times in the last couple of weeks, we've seen we go down to around the 21,500 odd mark. We tried to test the 22,000 odd mark, and we've been in this range. Do you think the bulls have enough now to charge ahead to a fresh all-time high, which is around 400 points away from here?
Yeah, good evening. Nigel, it was not at all expected the market can rebound like this. But I was hoping that 21,500, if the market manages to sustain, then we can again expect rally in the market. The rally was beyond expectations, and in fact, it has broken all its important level. But till the markets are not crossing 22,150, I think bulls will not get enough strength. So I'm of the view that the markets are going to remain volatile within the broader range of 21,500 and 22,000, 22,150 on the higher side. But if we see the market is crossing 22,150, then the real strength will emerge. And that will actually send the market towards the next levels of 22,500. So for the time being, if we see tomorrow any higher opening, then I think close to 22,000 levels, we see some profit taking in the market. And 21,600 and 500 is now going to act as major support zone for the market. The best part is that Bank Nifty managed to sustain above the 100, 200 days simple moving average, which is positive. And based on its formation, I think it is also heading for the levels of 46,500, where it has multiple resistance.
Okay, all right. So those are some of the technical levels to keep in mind. Thanks for that, Shrikant. Stay on. We'll have some more questions for you. Let's start by looking at some of the important stocks. And the stock of the day was M&M, as it reported a beat in the third quarter. Revenue was up 17%, profit increased by 61% on a year-on-year basis. However, the tractor segment was under pressure. Let's go across to Sonia for some more color on the numbers and the performance. Sonia?
Well, thanks a lot for that. As you rightly pointed out, the numbers were not bad. They were, in fact, better than what the street was estimating. But it is the tractor segment that has been under pressure for M&M. So let me just quickly run you through the key numbers this time around. A revenue growth of 17% is what the company clocked in. The EBITDA went up about 15%. The margins have been under a bit of pressure compared to what we saw last year, but that's also because of the tractor segment performance, while the net profits are up almost about 61%. The farm equipment segment has been under pressure. There's hardly been any growth on the top line. The revenues are flat year on year, and the margins are down 80 basis points year on year. As we know, the tractor industry across the board is under pressure because of unseasonal rains as well as the high base of last year. But even if you look at the auto segment on a sequential basis, the auto segment margins have fallen to about 8.2% versus 9% last quarter. So it would perhaps be hard for the company to hold on to these margins given that raw material prices have started to move up. But otherwise, the numbers in Q3 are largely above street estimates, and the stock closed in the green today.
Okay, all right, Sonia, thanks for that. Well, let's focus on another couple of numbers then that did come out. We had Nalco. The stock was up close to around 10%. And earlier today, when I done the market check at the morning, I said that that's going to be the stock of the day. It had moved into the F&O ban, and these numbers look nothing short of spectacular. Running you through the details, EBITDA number comes in at around 770 crores. Wow. We work with the number of around 500 crores. Big beat out there. Remember, selling price, that's determined by the globe on demand and supply dynamics on alumina as well as aluminium. But on the cost side, they have done a fair bit of work, and that's why costs were lower. So that's good news on that front. Both the segments, whether you look at the chemicals, which is actually the alumina business, You had the EBIT that doubled on a sequential basis, and the aluminum business as well delivered close to 480 crores of EBIT. So no worries on that front. They've declared a sweetener in terms of a dividend as well. So these numbers look very, very good. Valuation's not very, very cheap, but it's got PSU and metals. The street seems to be liking both these two themes, and here you have it in one company, Nalco. So explains why the stock was up and about. Mayuresh, what do you make of these numbers that came out today?
So afternoon, Nigel. No, I think fabulous set of numbers as you explained. To put further to your point, the expectations in terms of earnings delivery expected to continue at a decent pace might actually augur well from an earnings perspective. Having said that, I think from a valuation matrix perspective, when you compare Nalco with a lot of its international peers at this juncture, Alcoa, Nox, Hydro, and even Rusal to a certain extent, both on an EV/EBITDA as well as a price-to-book multiple. Obviously, Nalco is no longer cheap. So yes, the market justifying the kind of numbers that it has delivered, expecting good set of numbers to probably continue in the foreseeable future. So the momentum can very well continue, and that additional sweetener in terms of the 3.5% dividend yield that Nalco meets out. So yeah, I think the momentum can very well continue on this one.
Okay, all right, Mayuresh, got that on Nalco. Let's move on then to the sector of the day. And this had to be the OMC space. Oil marketing companies were rallying around once again. IOC, BPCL, HPCL all gaining between 5 to 8%. Now, JP Morgan has put out a bullish call on a lot of these stocks. The brokerage firm is betting big on HPCL and BPCL specifically. Sonal is here with more details. Sonal, what is making JPM so bullish on OMCs even after this run-up?
Well, they think there's still some value left on the table when it comes to oil marketing companies because of a couple of reasons. They say that despite the crude oil price rally that we've seen, crude prices are still back to those December levels. They are averaging around those Q3 levels. So that's the reason why they think that the outperformance could continue. So far, there was some underperformance, but that could reverse going forward. First, the crude prices are still at December quarter averages. Second, the diesel petrol prices ahead of general elections. There was an expectation there could be a cut, but that hasn't come about, and that is positive for their marketing segment. Third, the consensus EPS estimates for FY24 are still on the lower side, and that's the reason they are very bullish. They have upgraded the EBITDA, EV to EBITDA multiple from 5 times to 6 times. They say unless crude prices move further or retail prices are cut, there's still a lot of rally left for these oil marketing companies. They continue to prefer BPCL over HPCL because of the E&P upside or the exploration upside that they're seeing, and that's why they've raised target prices across all the three stocks. For BPCL, it has been raised to 720 rupees a share, for HPCL to 520 rupees a share, and for IOC to 205 rupees a share. So they still see a big upside from here on.
Okay, got that, Sonal. Thanks very much. Let me get both our guests' view on this very, very quickly. First, you, Mayuresh, on the fundamentals and on the valuation argument, do you concur with the JPM view?
So to a large extent, I think the stocks have moved up quite significantly, Surbi. What probably now gets played out is how crude probably moves. And if the large expectation of the market is crude moving within that range of 70, 75 to around $90 on the upside, I think a large part of the expectations from an earnings growth perspective is largely getting captured in. What probably now transpires is how Singapore GRMs will play out. And they are expected to be quite stable at this juncture. So on the refining part of the business, there is expected to be stability in earnings. And from an SOTP perspective for all these companies, the pipeline business expected to do well. The petchem part of the business, if crude prices stay in this range, also expected to do well. And therefore, the sum of parts probably are of the view generally that the earnings should probably grow at a very steady pace. Obviously, I think the price movement has been a little bit too stark. Yes, dividend yield is fabulous for both BPCL as well as IOC. But I think the move in terms of price action is a little bit too much at this juncture. So no fresh investments. Anybody holding on can clearly enjoy the moment.
Okay, all right. What about you, Shrikant? What do you mean? What do you make of this kind of moves that we've seen? Fabulous moves. How are they looking in the charts?
Yeah, Nigel, like whenever we see such type of activity in the market and in that particular sector, we try to see that whether it is relatively outperforming or not. And if we see the overall performance of these oil PSUs, then they are much, much better than any other PSU. And in fact, they are doing really well in that their own space also. So we are of the view that, yes, we are going to see further more activity based on its overall momentum. We like in that specifically BPCL, which is currently trading around some 590, around 626, 630 levels. From here, the stock can move to the levels of at least 660 or maybe 700 in the near term. It has also broken its all-time highest level at 550, 560 after a very long time. I'm going to say it was consolidating above these levels, below these levels since last 2015. But now after crossing these levels, I'm expecting now the stock is heading for at least 750. So it's a buy even at current levels based on its technical formation. And after that, we like IOC. So both the stocks are really doing well.
Okay. All right, gentlemen. Thank you very much for joining in. Good having you on the show today. Thank you for the perspective. Well, with that, we'll move on and take a look at some of the corporate voices that we picked up, some of the commentary that was quite relevant today. Mazgaon Dock has reported a good set of numbers in the third quarter. Chairman and MD Sanjeev Singhal said that the company continues to maintain its guidance of 12 to 15% growth for the current fiscal year. He also added that the growth rate in FY 22 to 23 was 20 to 30%. However, he doesn't see growth beyond 15% as we enter the new financial year, that's FY 25. Meanwhile, Amit Jingran, the new CEO of SBI Life Insurance, expects to see over 15% APE growth in the fourth quarter. Jingran also said that the insurer will also be able to maintain margins of around 27 to 28% in the near future.
Well, in Info Edge, tumbled close on 4% after reporting a muted set of numbers. Its MD and CEO, Hitesh Oberoi, said that IT hiring business was down by close on 7 to around 8%, while the non-IT hiring grew by around 8 to 9% on a yearly basis in quarter 3. He is not certain when IT hiring will pick up.
With that, it's time for a quick break on the show. We'll come back on the other side with the DStreet Chatter. We'll have Nimesh joining in on all the dealing room buzz and, of course, all the events that you need to watch out for tomorrow. Welcome back. Well, as promised, let's get you all the DStreet Chatter now. Nimesh is here. Nimesh, good day for the bulls. Good recovery given those challenging global cues. What buzz did you pick up?
Well, absolutely. A strong comeback for the market despite weak global cues, and even a stronger comeback for the PSU stocks in today's trade. But in terms of individual names, the first stock is Aurobindo Pharma. That stock was in the news on the back of the US FDA observations. But the stock recovered from the day's low, and I understand some clutch of domestic mutual funds were active buyers in today's market in Aurobindo Pharma. So that's the first name. The second was Chouhan Energy. That's been consolidating in a narrow range. But now I understand the company is likely to raise a large fundraiser is going to come very soon in that particular company. The third is Macrotech Developers. That's been buzzing on very strong buy flows. So expect high delivery volumes in today's trade in that particular stock. And the last is Vedanta. That's going to be quite big. The stock ended at day's high, but now I understand there's going to be a very large block deal in Vedanta very soon.
Okay, all right, Nimesh, thanks a lot for that. And before we wind down, let's tell you all the events that you need to watch. Mangalam joins us with that list. Mangalam.
Right, so expiry tomorrow is a Thursday, so the big event will be the Nifty weekly options expiry itself. But we're not still done with large earnings. We do have a few of them coming today, and as a result of which there will be important earnings calls to watch out for tomorrow. Stocks that usually react to earnings calls. We have Aditya Birla Fashion, NBCC, and also Gujarat Gas. Then there are a couple of investor conferences which are underway in the city. We have IIFL conference, so some of the companies that may be in focus here on your screens. And then we have the Axis Cap conference. And interestingly, there will be Aurobindo Pharma and M&M, both of them in that conference. So, there would be a lot of earnings related and the US FDA related questions to both these companies as well. Then talking about some macro data, tomorrow, of course, we'll get the Japanese fourth quarter GDP, the UK fourth quarter GDP, and US Jan retail sales. All of them will give us an idea into what central banks are likely to do.
Okay, all right, Mangalam, thank you very much with all of those details and the events that we need to tune into tomorrow. But for now, it's a wrap from Nigel, myself, and the entire team that puts this show together. Thank you for watching, but stay tuned. All the news and updates continue after the break.